Welcome everybody. We want to talk about ETPs, ETNs, ETFs, and what's basically inside there. But before we get started, maybe you briefly introduce yourself and also the company. There is a booth out there. It's worth a read. I learned a lot when I'm reading it, because I don't know anything about Litecoin, ETP, and so on. That's also new for me. Bitcoin is clear, and therefore it's a top news, especially also because family offices, professional investors, and so on, they have an easier life investing in ETNs, ETPs than direct coins, right? But now, please, Bradley, present yourself.
Hello there. Yes, my name is Bradley Duke. I'm one of the founders and co-CEO of ETC Group. We are an issuer of exchange-traded products that are backed by digital assets. We also have some thematic UCITS ETFs as well. But yeah, in a nutshell, that's what we do. We have today over $1 billion in assets under management, and we have 15 products.
Okay, so what are the products? That's primarily, I think, pretty straightforward. Bitcoin wrapped into an ETN, ETP, ETF product, right? Then Ethereum. What are the more exotic ones?
Yeah, so it goes all the way. There's Polygon, there's Avalanche, there's you name it. Look at the top cryptos by market cap, and we cover most of them. That where it makes sense. You know, we're not securitizing any stable coins. Doesn't really make sense at the moment. So
yeah, interesting point. And but it's basically direct cryptos one-to-one. Or is it already one step going further, saying, okay, let's use this basket or this crypto index or this and that strategy?
So it isn't quite one-to-one. So we like to have, to be able to buy a unit which makes sense. The products are all retail approved. So we wanted to make sure, like for example, for the BTCE, you're buying 1/1000th more or less of a each share, each unit that you buy is 1/1000th of a Bitcoin, just to make bring the prices in range so that you kind of an average investor can get in and get out. But yes, we have the products that we have are single assets. I can talk more about what's coming down the road in the future. But I think it's important to just to mention on that it's when creating products like this, it's important to select the right kind of investment wrapper around the product. We've seen what's happened in the US, right? So they were forced into using futures futures ETF, Bitcoin ETF, which is got all sorts of problems. Because there's obviously problems with the regulator, with the SEC, whereas in Europe we actually are a lot further ahead. There is a range of different types of ETPs out there using different structures. For us, we chose the ETC wrapper because we felt like this is something where there's full fungibility. You can convert between the underlying and the security, and for that reason, it tracks the underlying much more faithfully than if it was some sort of synthetic function, or where there's say like a trust underneath, or some sort of fund that's beneath it. That's in fact tracking the Bitcoin.
I think many people in the audience here and also digitally typically ask the question, where's the difference between ETF, ETC, ETP, ETN, and in Germany we also have the certificate
right.
construction, right? Can you, just without talking too much about it, like one sentence per wrapper?
Yeah, so look, I think the most important one, and that's why it's always funny because you're always reading in an American-based press, there's always been this singular focus on the Bitcoin ETF. When are we going to have the first Bitcoin ETF? And there was much excitement when it came out last year. In Europe, you can't have a Bitcoin ETF in that way. There's UCITS regulation. So there's definitions on how much concentration you can have to any single asset or any single issuer. So the idea of a Bitcoin ETF in Europe is just it can't be. You can have a Bitcoin ETF if it's investing in companies that are equities, for example. So that's the main caveat. In Europe, ETFs are usually primarily, there's a basket of securities underneath, and have to follow very strict regulation and cannot have a single asset. So ETPs is kind of a catch-all phrase that includes lots of exchange-traded notes, exchange-traded commodities like ETCs. We chose the ETC wrapper or structure. This was something that was developed for gold, actually. So when the first gold ETCs came, we found that these are now got many billions of. I think Zitra Gold is one of the big ones. There's lots of them. They here in Germany, they have. The structure is useful insofar as I mentioned before, there is this direct relationship and this convertibility. So you can go, if you've got a Zitra Gold, you can go and ask for your gold. You can say, here's my shares, I want to redeem and I want my gold. And it's the same thing with the ETCs. And then there's certificates. They're ones where you've got now counterparty risk because against whoever the issuer is. And then there's also ones that are not physically backed, right? So there's necessarily no Bitcoin on a one-to-one basis being held in cold storage, and there's some sort of a synthetic exposure that's being given. So these are all things that an investor needs to look at and understand, and whether, for example, the issuer is in a bankruptcy remote structure, so that if say for whatever reason they stop trading, the investors can still have there's a trustee steps in and can actually, people can get their investment back.
I think that was a very nice primer on this very complex topic. And concerning the legislation, all the products are passported in the EU, I guess. Maybe not any country, but I don't know, half of the EU probably, roughly. Has this been a cumbersome process with the regulatory bodies, or did it just, send the application and it passed through? Because don't forget, in the US, people are doing this since years and they don't succeed. So what's your experience with European bodies here?
So we started talking to ETC Group. The products that I've mentioned are physically backed, and also the issuer is German. So it's a Frankfurt-based issuer. A regulator is BaFin. And we had kind of started out the process with a checklist of what we wanted to achieve. We wanted a product that was retail ready. It was also going to be institutional ready, that's going to pass the due diligence of say, an investment committee. And for us, having a powerful, respected regulator was important. And so we started to engage with BaFin. Our prospectus took 14 reviews. White & Case, who are lawyers, said it's the most that they've ever done. Yeah, but it was a process of talking to the regulator and getting the regulator to understand what we were trying to do and to get comfortable with that. Luckily, here in Germany, we have BaFin is progressive with regards to crypto, and there's been a lot of forward-looking approach to crypto that we've seen here. Once you do get approval in Europe, yes, passporting does happen, and you can passport around Europe and into different jurisdictions. But each jurisdiction still has the right to slow things down or prevent listing, as we've seen with the FCA in the UK, whereby products like ours are not accessible for the retail investors, are not allowed to trade them. Because of an FCA ruling on this.
So we can also say that you educated people at BaFin, right? You educated them also a little bit, and the lawyers as well.
Well, right, yeah, we had to spend a lot of time. I mean, crypto is new. A lot of people are quite nervous about it, and it was definitely an educational process. We were the first centrally cleared product anywhere in the world, any crypto product anywhere in the world, and the first in Germany, and the first listing on Xetra, which with Eurex clearing as a CCP.
In what time, what years have these BaFin discussions?
So we started in 2019, and we got final approval in June 2020. So, coming up nearly 2 years ago.
It's interesting because, if you reflect and compare it to the US, in the US, there might still also be some political influences currently, whether they would like to have it from a political will or whether they would like not to have it, right? And what I found interesting was the announcement from the White House 3 weeks ago, right? 3 weeks ago. On the website, announcement on the regulatory agenda, what happens when roughly and who is responsible with ministry, and there was the White House logo, and in paragraph 1 it said, basically admitting that there are 40 million adult US citizens having owned or owning crypto assets. 40 million, that's 16%, and that's basically in paragraph 1, after the announcement of the White House started, So in my mind, this is very bold because now there's a signal out there that now the White House didn't really play down the numbers or ignored them or that I think there is some value in it that the numbers are clearly provided in sentence 1 in this White House announcement. And what do we learn from this? Because maybe now the political uncertainty fades away, because now basically the government over there is confirming and acknowledging that it's like that. Maybe the ETFs in the US might have an easier life from now on. Who knows, right?
Yeah.
What could be.
Well, I think I agree with you. I mean, that executive order that was signed by Biden in the US was a very strong signal to the market that, one, the US is open for business, and that there was going to be no sort of punitive regulation that was going to come into place. And I think that's given the size of the market and its importance in the world of crypto, that was a very, very strong signal. That is something we always worried about, the regulator and the misunderstanding or putting in regulation without thinking about what the consequences are, the unintended consequences often. But crypto is now such a big employer, and there's so many people have moved across, from financial services into crypto because they see this growth, they see this excitement. And I think any country that takes a very bearish approach towards crypto is risking a lot of a growth in that sector, tax revenues and also employment as well.
Yeah. Will you go to the US maybe one day, or are you planning to? Because you have the footprint and the experience, you have the custody tech in place, it all runs.
Right.
Why not? Right. You don't have to answer this, but it's.
No, I'm happy to answer to that. I mean, we would love to go to the US, of course. There is the requirement would be that our product would have to be registered ultimately. I mean, there's ways that you can go around that, registered in the US, but right now if they're not approving a crypto spot ETF in the US, then there's very little chance that they would approve ours. But I think if you're a certain quality investor, I think they call it a QIB, a qualified institutional buyer, or you're above a certain standard or certain assets under management, you can buy anywhere in the world, but we can't go there and sell, unfortunately.
Okay.
Yeah.
And you have multiple ETCs at hand, Cardano, Polkadot, Avalanche, I think, ETC. Uniswap is coming. Right?
Yeah, we've got a bunch more that are coming. I think there's certainly a limitation to how far or how deep you can go, because you start to get smaller and smaller market cap. So the appeal starts to wear out. But certainly in the future, I think the products will be moving away from the simple access products and more to asset management type products. Where you're investing in an index or you're getting yield, staking rewards wrapped into a product.
And you said that people could come to you and say, please deliver the Bitcoins, here's my wallet address.
It happens. We have it all the time. It's not very frequent, because it's actually kind of an inefficient way of getting your crypto. There's probably better ways of doing it, but some people just want to test it. They want to see actually does this work, and it does. So. But
does it happen on a daily basis or on a quarterly basis maybe? Is this?
No, so we creation redemptions on a daily basis. They're unlimited. People can create and redeem. We have, I think, one of the things that really is a standout feature of the products, like especially BTCE, the Bitcoin product, is the liquidity on the market, and I don't know if a lot of people know this, but BTCE was the #1 traded product on Zitra's ETF board last year. For the first 6 months of the year, it was #1 and it was #2 in the second 6 months. And that was beating iShares DAX, iShares MSCI World, iShares S&P. And this is kind of crazy, being in crypto and seeing your product trading, having higher daily trading volumes than these huge BlackRock products that have been around for decades. It was really something to see. And one of the reasons why there is so much trading activity is because we spend a lot of time working with the market makers to ensure that there is market depth, that there is the tightest spreads possible. And it's quite an interesting thing because there's so many market makers and they're all sourcing their Bitcoin in different places. The BTCE product has become a kind of a source of price discovery for Bitcoin itself. It's a kind of a consolidated tape, because somebody's trading at Kraken, another one's trading at Coinbase or LMAX or whatever OTC desk that they may be sourcing the liquidity from. We only receive the Bitcoin as part of the in-kind creation process.
Yeah, that's interesting.
Yeah. So
okay. So the customers or the investors who are purchasing this, what type of people is it? Is it like from Germany, from Europe? Is it individuals? Is it elderly people, younger people? Is it maybe family offices, asset managers who have issues with the KYC process at some crypto exchange?
Yeah.
Who is it?
Well, it's a good question, and it's really a big range. So people who are super, tech savvy are not interested in products like ours. They will just go directly and open their account at, Kraken and be their own bank, right? Handle their own storage devices and everything. And that's, I do that. And it's just really, it's like horses for courses. What's the right solution for you? There's a lot of, so we see the range. Germany is a very big market for us, of course. There's a lot of retail investors. They have the benefit of having a broker who's helping them with suitability. If they've come out and said, my risk appetite is, I want to maintain my capital, I don't want to take any risk, then probably a high volatility product is not the right thing for them. And that's the beauty of the kind of being a regulated product. But for sure, their family offices, private banks, hedge funds, we see in our product a lot of AUM volatility because there's a fast money that will come in because they see a BTC as a BTC proxy, a Bitcoin proxy, for say a cash and carry trade where they're shorting the CME futures and going long Bitcoin, and then they'll come out once that trade comes off. So it's a full range, but I think institutional adoption has been overstated. I think there's a lot of institutions who are still waiting in the wings, who are still getting their ducks in a row, who are still talking to their investment committees and risk committees and getting all the approvals done so that they can enter into crypto properly.
Yeah, this would have now been my next question. How is this supply and demand profile, how is it changing sort of like going forward over the next 12 months? Do you see maybe more family offices coming for whatever reason? Do you see large-scale asset managers at least being interested? They might then be still away from a decision, but at least maybe they have investment committees and at least proposing internally that we could do this and that.
Yeah. I think the largest asset managers will come. Some may not come even this year. They may take 2 or 3 more years to come, the biggest and slowest ones. They paid to be big and slow. They paid to be cautious. They're looking after people's pension, and but they will come. And I think as the investment case for the various cryptocurrencies is better understood, and they see, for example, with Bitcoin, it's a scarcity trade. It's about a hard currency in inflationary times. We still don't know the outcome of whether Bitcoin is a good inflation hedge. But once the data comes in and it's over time, and we're starting to see inflation now for the first time in a long time, and if it proves what everyone suspects that it will be a good hedge, and if you assign a certain percentage of the portfolio to Bitcoin, for example, then I think you'll start to see them coming in size. And also it's about the scale of the investment. The market cap needs to be big for the big guys to come in and not be too big a piece of the pie. And I think that's starting to happen now. But right now they'll be focused mostly on Bitcoin and Ethereum, maybe a couple of the others, but those two primarily just because of this market cap choice. And I always encourage all investors to really get to know the business case behind each coin, because they all are so different. You know, they have got a little, there's something that's going on there that's a little bit different from everybody else, and they maybe have a niche in gaming or in payments or in DeFi, you know, or just maybe a straight scarcity trade like.
So maybe next year when we sit here in around Easter 2023, then we will talk about the metaverse. ETC, who knows?
Yeah. We have an ETF on the metaverse, which we launched on 2 weeks ago on the London Stock Exchange. UCITS in partnership with Han ETF, which is our a partner for those kind of products, and also a distribution partner. So yeah, and there could very well be one on the crypto side as well.
How large does an asset needs to grow until basically you can potentially wrap it into such an ETC? You know?
Well, yeah. So we have internally, we have our own limits on the minimum of the market cap that needs to be, and they, you know, it can be quite small, but we don't want to. That'll always only have appeal for retail investors. The institutions are never going to go into, you know, an asset which is, you know, got just a few $100 million or whatever, you know, under management or. But you know, in terms of the UCITS ETFs, where it's the equities that are the constituents, you know, those firstly have to be listed companies, and this is, you know, with say DeFi, there aren't actually that many that are, you know, direct pure play DeFi players that are listed on a major exchange. Easier with the metaverse one, because then you've got companies like. You know, the various mining companies that are involved, and you know, the Meta, ex-Facebook, Microsoft. There's a lot of big listed companies that are there that are participating directly, and the VR and AR, you know, manufacturers, you know, hardware and software.
Okay, and so, you know, talking about Bitcoin, Ethereum, and so on, it's also a lot about understanding. So very often you might have some speculators in the beginning, you know, they don't understand anything, but they just go in there for portfolio metrics and so on. Right. So therefore they might start with an ETC product. But what I would like to ask, you know, is there some kind of rollover effect that people are then are getting financially exposed? They then read the news, they educate themselves, and after 1 year they say, so wow, that's an interesting technology, now let's sell the ETC and let's go directly into Bitcoin on a hard wallet. You know, is this kind of, is this strictly different customer groups, you know, like you and Coinbase and this and that? Or do you see some movement following education, for example? You know, a family office could also be interested having a Bitcoin on a USB stick to travel around the world and be secure everywhere, potentially, to move around the money.
Well, I mean, the business case or the reasons why people invest in crypto ETPs rather than directly are quite clear. It's mostly they don't have an appetite in actually managing the tech side of it. They don't want the responsibility of, say, losing or getting hacked and losing the private key or the seed words to the wallet. You know, we read all the time about these cases of people who invested in Bitcoin, you know, 10 years ago or like 8 years ago and paid pennies for their Bitcoin, and now it's worth hundreds of millions, but they're locked out of their wallets. And this is just you know, there isn't any helpline. There's no one you can call and say, sorry, can you reset my password because I've locked myself out. And this is one of the main drivers. There's a lot of people who maybe even know how to understand the technology, the encryption behind it, but would rather just say, okay, I'm buying this. It's going to be like shares of buying, you know, Deutsche Telekom or whatever it is, you know, and it sits in my brokerage account. I don't have to think about, you know, I'm trusting that these people, if once I've done my research, that the ETP that I'm buying has got, you know, institutional grades, you know, insured or whatever you want, custody, and they're going to be looking after that. So I don't have to think about it, and I can sleep at night, you know, not worrying about that. And the same goes from the individual and for the institution, you know, or family office or whatever level you're at. Yeah.
Thanks. That was a very nice closing word and a very good overview, I think, where we learned a lot. And then let's directly move over with the agenda to stay in our schedule. Thanks very much, Bradley.
Thank you.
And I think, thanks very much.